This is James Altucher with TheStreet.com TV. I'm here with Jim Cramer, ex-hedge fund manager and now host of the TV show Mad Money. But I want to actually take a step back and focus on your hedge fund.
Sure.
So I invest in hedge funds, and as far as I know, they all say long short,
Right.
but hardly any of them, and maybe none of them, make money on the short side. With your old hedge fund, what percentage of profits would you say actually came from you short selling?
Depends on the year. In 2000, probably 50%. I think that what people, you're absolutely right about short selling, and what they do, most of the shorts use a thesis. I never like theses. They'll say, well, housing's weak, so let's short these companies. Or there's a lot of credit card delinquencies, let's go over these companies. Or I feel tech is overvalued. I never shorted on overvaluation. The key to what I did was entirely looking at bottoms up and deciding which companies were falling apart. Using insider selling is a good example. Using whether the investment banks had flooded a zone with too much product, and going after fads after the first one is cracked. A lot of people feel like they have to ride it up and keep shorting. I never did that. I would much rather short a Commerce One, to use the example of the old days, or an ICGE after it is cracked. That's where the big money's made. My best short in the last 10 years was after all the IPOs cracked in spring of 2000. I was able to go after a couple of the management companies that were Scient, Viant. Those were my two best plays. Now, people don't even remember those, but those went from 200 to zero.
Yeah, and they were started by the same guy, actually.
Yes.
Like he went from one to
Exactly
the other, and then
right.
he left
Yes,
everything.
I know. So, I mean, these were not real businesses. And shorts tend to want to go after really high-quality companies.
But you know what, though? You say they're not real businesses, but I specifically remember Scient, actually. The day it came public, or a few days after, Morgan Stanley, which took it public, actually downgraded it, and the stock was still going up 7 points a day.
Well, as soon as it cracked, then you look. I've never been able to call it top. That's a fool's game. What I have been able to do is recognize how far a stock has come after its top. So if a lot of people would say, well, listen, Scient goes to 200. I got to start shorting it at 100. I would start shorting it at 150 on the way down because I need it broken.
So now, we bring up, though, an interesting challenge, and you bring this up in your book, that sometimes with these stocks, let's say everybody piles in at 100 and it keeps going to 200, you just got wiped out if you are selling short.
That's a fool's game. You never short while it's going up. Never. That is a recipe for putting your fund out of business. You have to wait until the chinks are evident to the longs. You cannot anticipate the chinks. You'll be right once and wiped out 4 times.
So based on this, and based on some of the metrics you described in your book Mad Money, I set up a portfolio on StockPicker, 10 potential short squeezes, and I rank them not only by the short interest ratio, basically how many days to cover, but also by insider buying. Every stock on there has a lot of insider buying.
Right. I took that list. It came out, I was alerted to it last week. And what I'm looking for constantly are ideas. And I use StockPicker as my basic research, then do applied. A lot of the companies where they're insider buying, I could never warm up to. And I saw that same list. I'm not going to warm up to an overstock. It has historically let people down. I'm not going to warm up to a semiconductor equipment company because I don't know the intricacies of that industry well enough. But when I see a secular trend, that's growth, I match it with stocks that are heavily shorted, that have insider buying. Bingo. Waste services industry. I talked about American Ecology on my TV show. This one's better. Bingo. Greenbrier. I happen to be a gigantic believer that the rails are the secular beneficiary of the collapse of our American infrastructure and the inability to find drivers of trucks. Multi-year thesis that Greenbrier will play out. I know that I meld that with what Trinity's saying, American Rail Car, and General Electric, and I realize I've got a real winner and that the shorts are just foolish.
Well, it's interesting also, you bring up waste services. What I liked about that one when I saw it on the list was that Pride's capital's in it. They tend to be, and then I know a little bit of their background. They tend to be long-term holders. Right. They're working with the company. They'll probably push for a sale, which they've done in other cases. So it's
the puzzle. I mean, look, you read my book, and it's interesting because, and I'm not look, a lot of things are coincident.
Right.
But in the book, and my focus of my TV show is that, look, it's more important to know now that the landscape's changed and we have these big funds that can make things happen. It's often more important to mimic what the good ones are doing than it is to do your own research, because they make things happen. I'm not talking about breeding at Applebee's. I am talking about Carl Icahn at Time Warner. When I hear when I see Maverick, I'll see Maverick, and I know that they do superior work. I'll see Lone Pine, and I know superior work is at hand. And when I see Verification, WCI Communities was one I did on my TV show because of Stock Picker, because I saw both Steve Cohen was in there and I had Icahn in there. And what's interesting is then WCI reports a just horrible quarter and the stock doesn't go down because the institutional support's too great.
Yeah.
So it's important to have all pieces of the puzzle. In particular with the short squeeze, what I liked is its names I hadn't thought of.
Well, we're going to be updating this short squeeze portfolio probably on a weekly basis.
Let me tell you how I would use. There's one that I didn't particularly like, Gander Mountain. Now, Gander Mountain has historically not been that well run, but it's hunting and outdoor equipment. Cabela's is a similar profile, but doesn't grow very fast. So at my hedge fund, I would have shorted Cabela's, go long Gander Mountain, hedge out the outdoor risk, which is often weather related, and be able to have a pretty decent play.
All right, well, again, we'll be updating that portfolio on a regular basis.
Fabulous source of ideas.
Yeah, and thanks for chatting about it.
Absolutely.
Thanks.